let's start with a simple question. What is money? Long ago, people traded goods directly, grain for livestock, salt for pottery. That was called the barter transactions. But barter transactions have limits. If I wanted fish, but you only get grain, then there's no deal would be made. Societies turn to precious metals like silver and gold, which is rare, durable, and widely accepted. So values could be saved and be restored. This is how coins were created. Later, currencies were tied to gold under the gold standard. In the 20th century, the US dollar replaced gold as the global benchmark. It is trusted for its strength and stability. But today, we must ask ourselves, is this system still sustainable for the future of global finance? For a whole century, the US dollar has dominated the world economy. But there's a big problem now, since COVID shut down the whole world, the whole economy. The Federal Reserve printed money through QE, inflation then followed. To fight the inflation, the FED raised the interest rate sharply, and the high rates strained the US Treasury, which is already deep in the debt. Then Donald Trump's tariff added costs and uncertainty. So the consumers facing higher prices and loans, they finally pull back in spending, which is true. Just one friend in the US, he just told me. Then the threat of stagflation might appear, which means low growth, high inflation, and high debt. So the value of USD now become questionable. Then when the money we trusted no longer function as expected, people look for alternatives. Let's talk about Bitcoin. From the distrust of central authority, Bitcoin was created with the decentralized technology called blockchain. Just like gold, Bitcoin is durable and scarce. Only 21 million Bitcoins will ever exist in the world. Over a decade, Bitcoin has seen the big booms and the crashes for so many times. In the beginning, it cost 10,000 Bitcoin to buy just 2 pieces. And now we are calling it the digital gold, and it worth 100 million times than before. So many countries and the US now treat Bitcoin as the strategic reserve. The existence of Bitcoin has changed the world, and there's no way back. But Bitcoin alone wasn't enough. The price of Bitcoin is so volatile, which makes it hard to use for payments or safe storage. Out of this, stablecoin, digital tokens tied to the US dollar or other currencies exist. Stablecoins gave traders a safe harbor within crypto. Without them, liquidity would vanish in time of stress. With them, volumes grow and markets can mature. But how to ensure the value of a stable coin? How to avoid pegging from the US dollar? which we have seen already for many times, is very challenging such as the algorithmic coin like Luna and UST have all collapsed. Only asset-backed coins like USDT and USDC survived, but it still faces some question relating to reserving mechanism and availability of external monitoring, such as financial audits. Then the US Genius Act is one step closer toward regulating stablecoin, which also tied the stablecoins with the US debts. It shows the ambition of the government to make stablecoin as financial tools, but it might be too idealistic. In the crypto market, liquidity comes from exchanges, automatic market makers, and the stablecoin pairs. Stablecoins are like the train rails of the system. The unit of account in DeFi and the base pair in trading. The bridge between banks and blockchains. But there's the key point. Liquidity must meet real demands. You can create many stablecoins, but if the market doesn't need them, extra liquidity won't create more tradings. A good example is BTC over USDT. The pair already meets the needs of most traders. When Binance tried to push BTC over BUSD, few people wanted to use it, even the big incentive available. The market didn't buy it, okay? That shows us the real liquidity is not just about supply. It's about the demand, whether traders actually wanted to trade it. So only a few major stablecoins can survive. Unless more capital flow into the market or new applications emerge to create fresh demand. For the crypto market, if we think about MQ, that actually represents the entire traditional financial market. Look at the traditional money supply, cash plus deposits. It is huge. It's tens of trillions in the US and over 100 trillion worldwide. Now compare with crypto. Even at its peak, the whole crypto market was just a fraction of that. Think of a small pond next to an ocean. If even a little portion of water flows from the ocean into the pond, the level rises sharply. That's crypto market's opportunity. Small flows can make a big impact. And if stablecoin are the bridges, the RWA real-world assets would be the highway. Tokenizing bonds, real estate, commodities, even carbon credit brings traditional assets onto blockchain. That means fractional ownership facilitates lower barrier of entry. Instant settlement reduces time, risk, and cost. Global assets makes local assets tradable worldwide. Imagine treasury settled across border in seconds, or property funds trading in small slices. However, challenges remain, such as regulation, custodian, KYC, etc. But the direction is clear. RWA is where crypto and traditional market can meet. In short, RWA will activate the M2 of the traditional market. And for the crypto world, the impact will be even greater. You might wonder what is the ERC, blah, 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 lots of technical terms, but don't worry, it's not your problem, because this is the reason why I am here, okay? Unlike the traditional market, Bitcoin and the cryptos traded 24/7, 365. Prices move every single second, and risk and opportunities never sleep in the crypto world. This world needs new tools for trading, which is absolutely AI. For years, algorithms traded a significant volume in the market. Today, AI reads news, blockchain data, and order books in real time. It performs with no fatigue and no bias. The crypto's non-stop market, AI is not optional. It is essential. This is something financial market has never seen before. A market that never sleeps, and the machines that never rest. So let's step back and see a new roadmap here. Money is no longer just paper, it is code. Markets are no longer 9 to 5, they are 24/7. Traders are not only human beings, they are AI agents. Assets are no longer locked away, they are tokenized and global. And liquidity no longer depends on banks. It runs on stablecoin rails on the blockchain. The dollar won't disappear, but it will share the stage. Crypto and the stablecoins won't replace the old system, but they are redefining the flow. So let me introduce myself and QTX. QTX is a one-stop quantitative trading solution for institutions and individual traders. With 4 years of high-frequency trading using AI and 5 years of Rust coding, we build trading infrastructure for speed and precision. We offer the lowest latency for market data, the fastest order placement, the lowest trading fees, and the full historical data and the backtesting facilities for all AI research. We provide cross-region connectivity with the lowest latency. We cooperate with major crypto exchanges to help traders to get on board easily. And this Q4, we are proud to going to launch the order execution service. Thinking about it, if a family office wants to buy 100 Bitcoins, no matter directly TWAP, VWAP, this slippage will be terrible because all the high frequency trading alphas are watching you, okay? So with our execution service, we can save a lot of your execution cost. And that's around 0.5 BP for Bitcoin. So just like Amazon grew from an online bookshop, become a cloud computing service, QTX aimed to become the ultimate platform for global asset management. So please let us solve your problem for your business, and let's work together and be successful. Thank you very much.